Hello and happy new year. This is the very first episode in 2025 for the Vancouver Life Real Estate Group, and thank you so much for joining us. Well, here we are. The dust has settled on 2024, and home prices in the Greater Vancouver area, well, they actually ended up higher than where they were on January the 1st. A surprise? Maybe. But there's lots of other interesting details that we are going to share with you today. The real estate stats for December are hot off the press, and we're going to highlight the most important facts that you need to know. Plus, we will unveil how the entire real estate year of 2024 wrapped up. And also, guess what? This is a special double header episode as we are going to review all of our 2024 real estate predictions that we made back in January of last year. Share where we were right, where we were fantastically wrong, and explore some of the emerging trends that we are seeing in the landscape today. Things are setting up for 2025 to be quite an interesting and very dynamic year in real estate. There may be some surprises in store for us as well. Let's get started. Okay, December stats for GVRD. Total sales, right? What's the health of the marketplace here? Well, last month saw about 1,760 homes sell, trade hands. Interestingly, that was the highest volume of sales we've seen in a December, going back about 3 years, and it's up 32% year over year. But still, let's look at the big picture here. And overall, these sales, they really are still slow. Last month was about 15% below that 10-year average. But do look forward because we are seeing a trend, right? December was the third straight month of sales that were 29% or more higher than the year before, right? We saw October, November, and December all 29% plus higher increase in sales volumes than the previous year. True, yes, they were coming off of a low baseline, but this is a trend nonetheless, and one that looks to continue going into 2025. Plus, the recent increase in sales pushed 2024 overall to have a slight increase in total sales compared to 2023 when we look at the whole year, but only by like 300 units, which equated to 1.2% more sales last year than 2023. So very, very similar, sales years in comparison. But ultimately, again, quite a slow year overall. 2024 sales were 21% below that long-term 10-year average. So if the year kind of felt sluggish to you, well, the data certainly supports that.
And I feel like that's a pretty good reading for the overall economy. When we look at new listings here, trending upwards as well. So 1,676 new listings. That's up 26% year over year. It's also the highest in 3 years. So long-term, December was about 1% below the 10-year average, so not too much of a change there. Yearly listings were notably higher. In 2024, they were up 19% compared to 2023. That's almost 10,000 more listings than the year before. And this metric was 5.7% above the 10-year average as well.
So what did that do to our inventory overall? Well, inventory definitely dropped in December, as it always does, and typically by a pretty dramatic fashion, because a lot of people, of course, will delist their homes if it hasn't sold by the end of December to try again in the spring months, maybe January, February, March, and so forth. Inventory dropped below 10,000 at the end of last month for the first time, dating all the way back to February. We ended the year with about 9,560 odd homes still actively listing. That was up from last year, about 11% a year over year increase. But what's notable, last month was actually the highest December final inventory count in 6 years, dating all the way back to 2018. And it is currently 25% higher than that long-term 10-year average. And keep in mind, both October and November, they were basically the same at like 26% above that 10-year average. So there are way more homes available over the past 3 months. And we're going into coming months here where what I believe will be an elevated amount of listings, especially for January. You can kind of get a sense of what's happening on the streets right now. And I think people aren't going to wait until, let's say, March to list. There's a good chance we're going to see quite a few come out this month.
Yeah, I totally agree, Dan. I think a lot of that is going to be Based on what we've seen with interest rates, the last time we saw a 50 basis point cut, about a month and a half later, it did spur the market on a little bit more. It was certainly more topical in conversations with people we were doing open houses with. And the same seems to be true, I think, with the boots on the ground perspective, just with respect to what we're bringing to the market here. And it's all coming quite early. So I do think, we're going to continue seeing this trend, much like you're alluding to. Let's talk about the sales to active ratio here. Overall, we're sitting at 18%. So that's sort of on the comfortably higher side of a balanced marketplace, and that's up 2% month over month. This is the 8th month in a row of being within this balanced market framework. Then now looking here for separating it out, by asset class. 13% for detached, that's up 1%. 27% for townhomes, that's up 3%. And the 4th month in a row where we're seeing this increase. 21% for apartments, that's also up 3%. Some very interesting metrics here. We are certainly trending out of that balanced sort of marketplace. Everything seems to be increasing and doing so a little bit earlier than the spring market would otherwise allude to.
Ending the year with condos in a seller's market, that was not something I would have predicted. Mm-hmm. But let's move on here. Foreclosures, our newest metric to add to the stats. Not much movement there. It actually shrunk. There are less foreclosures in December than there were in November. Just dropped by 4, now sitting at 242. So pretty stable. Again, I'm not expecting any spike in foreclosures here. It's just not that type of market here in Vancouver.
Yeah, moving on to days on market here. We're looking at 28 days on market on average to sell your property. That is up 8 days on average here. This is the highest days on market dating back to January of 2020. Not too surprising considering we are in the slower end of the year. But it is interesting to see it that high considering the rise in the sales to active ratio that we're seeing. I wonder, Dan, if we'll see that tick down in the coming months. I guess that'll largely depend on buyer appetite.
Early prediction, early prelude to next week. Yes, days on market will go down next month. Okay, price, always interesting here. So what did price do? HPI, which we always start off with, it declined once again. HPI has gone down 7 months in a row. Last month, the home price dropped by $600. So HPI home today, $1,171,500. But overall, when we look at the whole year of 2024, prices are up, though that much. And if you're not watching this, it's that much. It's tiny. My fingers are basically touching each other. Homes went up $5,100 in 2024, according to the HPI. That is 0.004% increase. So basically flat here, right? But still, even flat numbers may be a surprise to some people who thought the Vancouver market was going to collapse or drop significantly in 24. And nope, didn't happen. Once again, Vancouver, the housing market is remaining incredibly resilient. What about Toronto? Just a quick reference to a couple other data points here. Excuse me. December information was not out at the time of recording, so we're going to do November to November. MLS prices in Toronto down only 1.2%. So that was a bit of a surprise to me. All these nightmare stories we're hearing about basically the condo issues, condo collapse, if you will, that's happening in Toronto. I expected to see a much deeper decline in prices year over year. We'll see what December brings, but ultimately it looks like Toronto will wash out, less than a 2% decline, which is a bit surprising. Toronto obviously has significant headwinds going into 2025, and especially in that aforementioned condo market. So we will continue to share the key data points as they come out for that region into 2025. Nationally, same thing here. Data is only currently available up until the end of November, but year over year data shows that the average Canadian home increased by 7.5% in 2024. I had to double check that, but it's absolutely correct. This was led by a couple of provinces, or 4 provinces rather, that had significant double-digit gains, which included Alberta, Manitoba, Quebec, and New Brunswick. So actually, in comparison to the national average here, BC fell very short, at basically flat compared to 7.4%. It underperformed. Though let's keep in mind, BC still holds the trophy for having obviously the most expensive homes. The average price in BC is still the front runner. But moving on to median price now, median price is kind of the most interesting. And I say that because it has increased for 3 straight months in a row now. So median has a bit of a trend there, sitting $979,000, up 4.5% year over year. And what's wild is if we pull back and we reference that good old peak pricing we saw in 2022, median home prices are only 2% below all-time peak pricing. So if median is your preferred pricing metric, this one's kind of the strongest performer right now. And if median detached is your preferred metric, well, that actually went up as well. It went up $50,000 in 2024, up 2.7%. And lastly here, average prices, average went up as well, 6%. Average homes are 1,283,000, up 3.5% year over year. So ultimately, we have ended 2024 with GVRD, with Vancouver home prices. All 3 price metrics rose year over year. There you have it. Now, let's get into our 2024 predictions review. How did we do? Where did we miss? Where were we right? Well, again, we always do this for basically entertainment purpose because predicting Vancouver even 3 months in advance is quite difficult, let alone 12 months. But either way, let's get into it. We start by setting up the framework, right? What are the economic drivers that affect real estate in Canada, and then the prices that ultimately happen after that? So let's see. Prediction number 1, will we see a recession in 2024? And of course, our predictions were based on what the government defines a recession as. We don't measure this on the per capita recession as we probably should, because we know that has been negative for I think 7 straight quarters here. But either way, we're going by the government defined. And I said, yes, absolutely. 2024 would see a recession. It would be shallow and last 2 quarters.
I want to asterisk this one because I think, what the government did also change and move the goalposts on us and pull things in and out of baskets and reweighted them. So I feel it's a little unfair. I think we're more right than we would have, technically been wrong. I was calling for a technical recession, though I thought it would be on the shallow side. I still believe that to be the case, but based on the bona fide data, we were both wrong, at least on today's data. Maybe looking back here, the government will continue to massage how the performance actually was. And maybe, in fact, we are in a true recession, which I do believe. But as of today, we're not, technically speaking. So, but anyhow, with that said, next, let's move on to population growth here. So I was suggesting that Canada would continue very strong population growth, and I called 750,000, which was, I thought, quite ambitious, but I don't think we were ambitious enough.
Yeah, surprisingly, I was just above that at 800,000. But ultimately, the data we have is Q3 to Q3, so full years of data, and we were both wrong because over the last 12 months, population growth 952,000.
What?
It's under a million, but it's above what we both predicted. Though, next week we are doing our predictions for 25, and one quick piece of insight here, population growth is slowing dramatically. Okay, Q3 grew by just 0.4%, which was the lowest rate of growth dating back to 2022, and the lowest Q3 dating back to 2016. So population growth is going to dramatically change the landscape in Canada in the upcoming years here, and we'll dive a lot more into that next year, but a bit of what's to come. Okay, shifting to the job market now. Okay, the unemployment rate was our next prediction. A year ago, when we made the prediction, it was at 5.8%. Okay, and I said, well, it's definitely going to increase. You could just kind of see that was inevitable. And I predicted the unemployment rate would increase to 6.5%.
Yeah, I called 6 to 6.5%. I think, I also agreed with an increase. I just thought maybe our government would act a little faster, but it didn't because we were both short. And the actual number came in at 6.8%, which again, to me, feels like recessionary levels of unemployment. Nevertheless, we were both too optimistic on the jobs market here, off by about 0.3 or 0.8 respectively, depending on which one you peg me to. Looking at the inflation rate, at the time that we recorded it, it was at 3.1%. I thought that we would hover somewhere between 2.5% and 3% for the year. With that said, though, it dropped as low as 1.6%, but it did not go above 2.9%.
Yeah, I was even more pessimistic here. I thought it'd be between 2 and 4%, and I said I would end the year at 2.9. And like Ryan just said, right, 1.6 to 2.9 throughout the year, ending at 1.9. So I was way off. Inflation was battled and lowered more than we both predicted. Ultimately, a good thing here. Now, BOC, the interest rate. What was it going to drop to? Okay. And keep in mind, a year ago when we made our predictions, it was at 5% and it had been there for some time. I came in thinking 3 cuts, quarter point each, ending the year at 4.25.
I was a little bit more on that. I thought it was going to be 0.75 to 100 basis points. But we were both wrong. We got 5 cuts and we ended at 3.25%, roughly 100 basis points off the mark, which is significant when it comes to trying to guess, I think, what the BOC is going to do. But, good luck to anyone in that respect. Mortgage rates here. They were the next influential factor that we looked at. At the time of recording, variable was in the low 6s. And fixed rates were in the mid 5s. I predicted that insured rates would hit 3.99% and fixed would be 4.3 to 4.5.
And myself, I went fixed and variable. So fixed, I said mid to high 4s with variable in the low 5s. So ultimately, Ryan was pretty close on the insured. You can get insured today around 414. And fixed, well, that's about 412. So we were actually both too pessimistic on that, as well as variable. Variable, I thought low 5s, and you can get variable on 435. It's low 4s today. So, obviously when you underpredict the BOC, you have to underpredict mortgage rates as well. So those kind of work in lockstep to a degree. And that's just where they panned out. But hey, again, better news than we predicted. So that's, kind of the silver lining, if you will. Government policies always come into play in real estate, and we kind of made some soft projections, if you will, some top level ones. And I said, governments, well, knowing how our housing crisis is panning out and how few homes are being built, I predicted that some form of government would incentivize builders by lowering the taxes and fees on constructing homes. And this is end user homes. Okay. We're not talking about rental incentives because those do exist, but this is for the end users that we're talking about. And hey, I was wrong. The taxes, the fees, they basically increased across the board and on multiple levels here. So only demand side policies were created or extended last year. And I did not see the government's truly incentivizing builders for end user homes.
It's so logical to think about your prediction, right? Like, we're low on homes, we're low on supply of homes, and we're bringing in millions of people. Logically, you would lower the taxes around homes so they could get built faster, lower the fees around them so you get built faster, you'll make it up on volume. But our government just had a completely different idea. And anyways, here we are with higher fees and less homes. I also thought that they would create an environment where it doesn't take so long to get permit approvals. I thought that this would be a huge incentive for municipal governments to chase. I thought that implementing speed and reducing friction would lead to better output, but I was wrong. Maybe outside of Burnaby, they were maybe the one municipality who got a little bit more, who did away with the development permit process altogether. So there's some silver lining there. Perhaps a slight improvement, but when we hear about 600 building permits in the backlog now, just with the city of Vancouver, I mean, things really drastically changed. We're in a housing crisis. We haven't really dealt with this issue, and here we are again with all these different kinds of forms of homes that will help with the problem, only to get bottlenecked at the same source. So, alas, we'll move on. Sales volumes. Where was I with sales volumes? So I said that we would end the year 10 to 14% below the 10-year average. And Dan said,
yeah, year over year approach, of course, estimating 15% more than 2023. Again, a bit wrong here. It was 21% below that 10-year. It was quite low, of course, last year. And we knew it was going to be slower, but not quite as slow as it was. And it only increased 1.2% overall, not 15%. So definitely missed on sales volumes. And we touched on that one earlier. Okay, so obviously we've covered the economics. Now we're getting into the actual data, the predictions of what we think the sales numbers and such were. So the next one up was the sales to active listings ratio. And it never entered a buyer's market in 2023 is one thing to note. And, we were kind of looking forward into 24 and going, okay, well, what's it going to do for the following year? I predicted half of last year would be in balanced market and the other half would be in seller's market. Not that off, but definitely still wrong. It was actually 1/3 in sellers and 2/3 in a balanced market.
And while I wanted to try and capture where we would end the year, I said it would be somewhere between 21 to 24%. So that's a shallow seller's market. And while it has been increasing over the last 3 months, it just didn't get there. It finished out the year, much like we just talked about, at 18%, though we do see everything rising. So pretty good stab, but ultimately we were both off again. I don't know how many of these were actually on. With that said, let's have a look at inventory. I said issues will remain and things won't change much from 2023. I thought that we wouldn't cross 12,000 in inventory. Definitely wrong there.
Yeah, I saw an increase overall, sort of month, about 10%, but it wouldn't cross 13,000 as any kind of monthly cap. Well, it basically ended up blowing through these numbers. 2024 was a listings year. I mean, still, again, overall sluggish, but definitely much more elevated than the previous 3 years. About 19% increase in listings for the year as a whole. And as you remember, we definitely topped out over 15,000 in a couple months there. So inventory we were short on, and there was a far more selection for buyers last year than the previous couple of years. Now let's talk about the pre-sale market, because this one was, there's a couple surprises in here, right? We know how challenging the pre-sale market has been the last couple of years, but I think there were some volumes that were moving maybe a little bit quietly, sort of under the headlines, if you will. So my prediction moving into 24 was that we'd see about a 20% increase in the units brought to the market with an annual average of a 30% absorption rate, right? Almost 1 in 3 homes would be purchased that were brought to market.
And I said that we were going to see a 10% increase in the units brought to the market with a 35% absorption rate. So similar level of absorption, but I didn't think developers were going to be as keen. With that being said, 15,101 units were brought to the market, and that is a 21% increase compared to 2023. So Dan was actually very close on this without going over, so he wins the Price is Right. But with that said, I was way off at 10%. We're a good 11% higher than that. So with that said, absorption rate, we were both off. It was 25%. That is without December data, compared to 34% in 2023. So we were both wrong on that front there. Looking at rental rates, this I think caught us off guard by some margin. So I suggested that rental rates would have a slight increase of 2.5% to 4%. Dan was a bit more ambitious.
Yeah, I was looking as we were going into 24, there was huge immigration numbers, right? We were clocking in this 1.2 million annualized people into the country every year, and not a huge number of completions as far as the rental units go. So I projected like this huge 8% increase in rental rates, but yeah, way off. I think inflation won that battle, and rental rates actually dropped by 8%. So, I guess a much better outcome for those in the rental market than what we had predicted. Of course, those looking to collect rents didn't like the outcome so much, but let's keep in mind we're still well into the double digits higher than pre-COVID. So take that for what it's worth. I guess on the other end of that spectrum is the luxury market, right? We're kind of like tracking this one for fun and seeing how many homes in Greater Vancouver sell over the $7 million price point. It's a very high number, but there's a decent amount of volume that happens up there. And in 2023, 86 homes over 7 million sold. And I thought that was going to increase. I think I said it was the Gretzky number. We'd see 99 sell in that year because we saw a lot of froth in the high net worth individuals. And we thought they'd be deploying that capital into places like Vancouver and buying those luxury homes.
And to be fair, some of the biggest sales in the luxury market did take place last year or this year. But the volume with which they took place shrank dramatically compared to what we were projecting. So I said it was going to be about 91, and we were both flat out wrong. It was 55. It's quite, substantially less. And then rolling this over into price here. So this was very interesting. Everybody wants to know where your price action is and what your price assumptions are going to be for next year, which is why I'm interested for next year. But looking at this year, as we kind of already mentioned, I suggested HPI would be 6% higher. Was definitely not correct there. Detached, I said, would be 7% higher. Townhomes, 6% higher, and condos, 6% higher. So I was quite ambitious on the price action. I thought inflation was going to be still hanging around, but it turns out it was not to be.
Yeah, I'm looking at mine too. Pretty ambitious here. HPI overall at 4%. Detached with multiplex, I thought those were going to get absorbed very quickly and push the detached numbers up, hitting 8%. Townhomes at 3% and condos at 5%. Okay, so what really happened? Well, HPI, like we touched on, basically 0, right? So we missed that one 4 to 6 points. Detached was pretty small, but it was up, right? 2%. And so we missed that one as well by, let's say, 5 to 6 points. Townhomes, I was actually right on one of these price metrics at 3%. Ryan was off by 3%. And condos, we were off by 4 and 5% because they only went up 1% last year. So don't remember exactly what was happening in January when we recorded this, but clearly we had some very optimistic rose-colored glasses on. But interestingly, I had actually looked at the year before's review, and we did the opposite. We both thought in 23 that these prices were going to go down quite a bit, and they went up quite a bit. So I don't know. We lost both years, but on the opposite ends, right? 23, we were way too bearish. And then, of course, 24, we were too bullish. So next week is going to be quite interesting in our predictions for pricing in 2025.
Can I comment on that too, Dan?
Please.
Just because I as I was going through the data earlier today and looking at it, I was laughing to myself because of, in some instances, of how wrong I was. But it also showed me that I think I tend to be quite optimistic in the way I'm perceiving things. That I think is quite evident here. And so, I then began to think to myself, well, I wonder if in the predictions episode next year, I'm going to have like this contradiction bias where, I was aware of my optimism in the last one. And so going into this one, I'm going to overcorrect and go down and be too pessimistic. And so I'm trying to really recognize where my biases are in this. And I think it's really interesting when you go back and look at the previous year, how we were too pessimistic. Now we became too optimistic. And I wonder if we'll continue the trend to be too pessimistic going into next year.
It's so hard to predict Vancouver real estate. It moves so fast, and it literally can move month over month. But why don't you share the final predictions here, Ryan? Start with you, and that's the top 5 markets that we think will outperform GVRD, right? So all it has to do is do better than 0%.
Not great, honestly. Squamish, I thought was going to be a great contender. It was down 1.3%. Whistler, which performed so well, I thought would also continue to be strong. It was the worst performer, down 8.5%. And I think that's obviously reflective in the luxury homes that sold, the volume with which that took place. It's interesting to see how all of these things begin to correlate here. Coquitlam down 1.7%. My goodness. New West outperformed it by 1.4%. So I was right on just one of these because Port Moody was down 1%. Now, one slight caveat is at least most of them were within 1.5%, but except for Whistler, I was way out.
Yeah, as a quick reminder too, so when we do these episodes, we don't tell each other what our predictions are, right? They're unveiled basically in real time on the episode. And so ultimately, I had two of the same cities that Ryan did, both Squamish and Whistler. Obviously, we know those were both wrong. They did not outperform. They underperformed the GBRD. And, 8.5% for Whistler, like that's a hit. And I pulled up the chart today. Whistler's back to April 2021 prices. Like we're going back 3.5 years, more than that, so that's pretty significant for a region that is still high demand and obviously with no foreign buyer tax. But my next three were okay. Port Coquitlam, yes, that was a decent performer, up 1.5%. Langley just outperformed Vancouver at or GBRD at 0.3%. And we are ending on a high note. My final prediction of last year was that Kitsilano would outperform it, and it blew past at a whopping 8%. So one win on the board. If there was anyone, it was that one. So there you have it. Thank you so much for watching. Again, next week, 2025 predictions. And, like I said, we won't be sharing our answers. They're all going to be unveiled in real time. So you're going to kind of hear them as we hear each other's answers. So really looking forward to that one. Happy New Year. Once again, have an awesome weekend. We'll see you here next week.